All right. What is up, traders? What's up, tycoons? Super excited for today's video. We're going to take a look at gold and silver. Going to do a nice breakdown of those, a very detailed technical analysis. As always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So please be sure to read through the full disclaimer. And if you ever want to reach out, you can email me, ZachlyTrades@gmail.com. I also do one-on-one personal coaching sessions if you guys are ever interested. I do those every week, and we can work on scheduling a time. Now, let's get into the charts. So here we are. We're taking a look at GLD first, and the timing couldn't have been better, right? We actually got into the metals right around this area after we got our ABC correction we were expecting. We had a very large impulsive five-way move to the upside, and after hitting the targets here, we would expect an ABC type of retracement and a pullback, okay, for the next possible leg of a five impulsive move to the upside. But recently I did sell here, okay? And when we take a look, now I wasn't playing gold or GLD. I was actually, in fact, in silver and SLV. And, we'll break down really why I sold here in a second. But it seems like we're starting to get our first wave up, and we could be due for a pullback, or this could be part of the pullback here at the moment. And then we would be expecting another third wave to the upside. But if we zoom in a little bit more, we can see that we are still above the year to date and month to date anchored VWAPs, but we closed below the weekly anchored VWAP right here. So the hand does go a little bit more to the bulls in this case because we are above, most of our anchored VWAPs, but it is worthy of noting that we basically closed right at the weekly anchored VWAP here. Now, 182.61 is going to be a big level on the chart for GLD, and it's very possible that we could be getting an inverse head and shoulder setup, right? Where we have a left shoulder here, then we have our head, and here is our right shoulder forming at the moment. 179.85 is going to be a big level of support that we really need to hold above to see this potential inverse head and shoulders play out. Now, one thing that I'm cautious of, okay, is there's these two really big gaps down on the chart, okay? Now, these gaps, they tend to fill about 90% of the time. The big question is when they're going to fill, not if they're going to fill. So that's definitely a big factor. One thing that I really do like, all right, is we came in here and we did something pretty important, okay? So notice here how we're making these highs and we're making these higher highs at this point on the chart. When you come down and you take a look at your RSI, you can see we actually made a high, made a lower high, a lower high. So this is a simple term known as bearish divergence. And when a lot of people were trying to buy gold up here at these levels, I was waiting for this ABC correction, and it was very tempting to get in right around this area. But ultimately, it was the right decision to wait for it to come down right around that 61.8% retracement level. But back to the divergence. So, a really good way to see when something is breaking out and showing a lot of strength is if you have a bearish divergence trend line and you break through there. And you can see we actually broke out and we came back and we perfectly retested this, right? If I was to extend this drawing out here a little bit to the right, you can see that our RSI bounced right off of that level there. So, that's very good thing to see. Now, what we need to be cautious of is a look above and fail, right? Because we have to break out, and the retest right here, this is the opportunity for bulls to show that they're in control of the price action and keep things pushing up higher, right? But what we need to be cautious of is that look above and fail, because if they fail right here and we end up breaking back below this range, that's going to be a bearish signal, and that's going to show that the sellers are the ones that are actually in control. And it's very possible price action could be drawn towards the two gaps down we have right around the 170 price level. So that's definitely something I'm watching out for at the moment. If you take a look and we zoom in on our MACD right here, you can see it's very close to curling over and giving a sell signal. So right now, I think that caution is best to use, and there's no reason to force a trade or anything. Right. When we take a look at the gold futures, and if you guys have been watching my videos on gold and the metals, things are playing out very, very well. Right. We had the 5-wave move to the upside. This drawing's been here for a while, and then we were expecting an ABC down, and it almost played out perfectly according to the drawing. The gold futures look a little bit stronger, okay? And that inverse head and shoulders looks like a better case scenario on the futures. But like I mentioned, it's those GLD charts and it's the SLV charts that's kind of spooking me a little bit. Here you can see we have the left shoulder, we have the head, and then we got the right shoulder, and you could say that we broke through this neckline right in this area. All right, and we would be looking for some follow through. 2011 is going to be a big level, and then 2066, those are going to be the big levels. This right here is where we have that overhead supply that ultimately pushed us back down multiple times. And again, you can see that we got that break from that initial bearish divergence trend line here. That was a very nice thing to see. All right, and we want to, basically continue this movement, continue this momentum up to the upside. If we go ahead and take a look at SLV right here and kind of dive into silver, you can see that the move was super aggressive on silver. Now silver is much more manipulated than things like gold and than something like gold. And you can really tell by the massive moves that it tends to make. Now we have really three big gaps down. We had four, okay, but if you see here, we recently just filled this gap down after coming up, and look at what we did. We exactly filled the gap up right here, right? There was a gap up on SLV to about 23.16. And at this time, I went ahead and got into some short positions to kind of hedge my longs. And, here recently, I was actually able to close both the short positions and the long positions in profit. So definitely played that really well. Again, we're expecting to see, another 5-wave move to the upside. So we would see a 1, 2. It looks like we're getting this pullback now for wave 2. We've already filled the first gap. But, something that has me a little bit cautious, again, is all of these gaps down, right? We have a rounded top right here. That's, signs of a topping signal, right? We see that over here. Again, these aren't signs of a lot of strength. We could see buyers step in here soon. But, things like the dollar and things like the 10-year treasury have been ripping lately. Right. So definitely need to be cautious of the 2 gaps down, really 3 gaps down we have on SLV. We have one all the way down to the $18 price level. So that's what's got me a little bit spooked out at the moment. And we should have some more clarity within the coming weeks or months, and be able to get a better picture of where things are going, where things are really headed when it comes to things like SLV and silver and gold. All right, let's take a look at the TNX real quick. This is the 10-year treasury. And the 10-year treasury has been on a recent spike. But if you've watched my bond videos, right, because I do in-depth bond market analysis every single week, I am really bullish on treasuries overall. And I do think that it's possible by the end of the year or in 2024, we could see the TNX, the 10-year treasury, up in this 4.8 to 5.2 region. And a lot of people really aren't expecting that, but the whole thing is why fight the Fed? They keep saying they're going to keep rates higher for longer, and until that narrative changes, there's no reason not to believe them. Now, we completed a 5-wave impulsive move to the upside. And it seems to me like we're getting our ABC correction to the downside. And again, it's following the drawings to a T here, right? And we're using a little bit of Elliott wave analysis. And, we got our 5-wave move up. We came down for the A wave. We got a strong B wave retracement, but look at where it exactly rejected at the 78.6% retracement level, which is 4.024. That was a big deal for me. And we've already started moving a little bit lower, but it's holding 3.963 as a strong support level. So, if we can break through our support levels, then most likely we're going to see TNX come down to the 3.6 area, 3.643. That's, would kind of be the target area for the C wave in general, kind of a general target area that we would be looking at. And that could be bullish for things like TLT, and maybe even bullish for some of the metals, and things like gold and silver. We'll have to see if this is going to play out. We definitely got to be careful right here because we're very close to breaking this trend line, and we could just continue this upwards movement, invalidate the structure, and get a breakout here and see things start to head up towards 4.2, 4.1. So, you definitely want to watch out some of these treasury yields. Again, when you look at the dollar's been ripping here too. And the dollar has this pattern known as an inverse bump and run pattern. Okay, so here you have your prevailing downtrend, and you have the aggressive bump down in the price action. And once you break this bump trend line, this is typically when you get the run, right? And so you would be looking for a sharp move to the upside to break out through both of these trend lines and take you up towards this area. There will be this overhead supply area up in here. So, this is something that I'll definitely be watching closely over the time. And you can see how these things really correlate with each other. If we were just to throw DXY on here and then throw on, we'll throw on TNX, okay? And then we'll also throw on GLD, and we'll also throw on SLV, just so you guys can get a good visual sense of how some of these things correlate with each other and some of the other things that impact, prices of different assets and equities. So we'll go ahead and remove some of the drawings here. We'll make this a line chart as well. Okay. And we can see, as the dollar is going up here, the dollar is going to be in white. GLD and SLV are going to be in blue and yellow. All right. So you can see the dollar is moving up. Okay. Dollar moving up here in white. We're seeing GLD, SLV going down. We're seeing TNX. So we're seeing the dollar and we're seeing treasuries go up. And what are we seeing? We're seeing things like GLD and SLV start to go down here. And when you zoom out a little bit, you can see that, really GLD and TNX. Let me try to get a good kind of snapshot for you guys. But basically, TNX has been overall in a downtrend ever since hitting its peak in October, right? Same thing with the dollar, peaked a little bit earlier in September, and we've seen assets like SLV and gold, GLD, start to rise, right? So we're seeing a peak in the treasury rates, a peak in the dollar, those are going down, and we're seeing GLD and SLV going up. So we need to be careful here, right? If the 10-year treasury, if treasury rates continue to go higher, if the dollar continues to go higher, that could be a little bit of a headwind for things like gold and things like silver. Now, hopefully you guys enjoyed today's video. If you did, smash that like button, subscribe to the channel for more. I do videos like this every single week. And if you ever want to reach out for those personal coaching sessions, you can always email me, ZachlyTrades@gmail.com, and we can work on scheduling a time together.